It's my pleasure to welcome you to this Net Positive Day event on this beautiful September 23rd. We have a fantastic panel today called Canada's Ecological Transition, Policy, Business, and Sustainable Design. And yeah, I'll walk you through the first seconds of this event. As a moderator, my name is Hugo Lafrance. I'm associate at Lemay for sustainability. And I'll just give you a brief overview of our panelists' bio today. We have a great panel. To start with Thomas Mueller is President and CEO of the Canada Green Building Council and CEO of the Green Business Certification in Canada. Thomas is the founding director of the Canada Green Building Council and became President and CEO of the Council in 2005. As the Chief Executive, he leads the Council National Green Building Strategy programs and standards along with advocacy and policy initiatives. In 2018, he was appointed as CEO of Green Building Business Certification Inc. Canada to deliver advanced building performance standards to the industry. Thomas is a well-known advocate for green buildings, sustainable community development, and market-based solutions for carbon emissions reduction. Dave Sawyer. Dave Sawyer is a principal economist at the Canadian Institute for Climate Choices and Environmental Economics, Inc. Dave is a leading environmental economist with a 29-year track record in solving policy challenges for sustainable development. He has a long history in applying economics to support climate change policy. He has conducted numerous cost-benefit analysis of alternative regulatory actions and develop models to explore the economic impacts of adaptation and mitigation choices. Among other positions he held, Dave was the International Institute for Sustainable Development's Vice President for Climate, Energy, and Partnerships, leading a team of 20 adaptation and mitigation specialists working on low carbon, climate resilient, and climate resilient development globally. Finally, on our panel, Loïc Angot, our sustainability practice leader at Lemay, with more than a decade of sustainable building and planning design experience, a master's degree in engineering and an MBA. Loïc is currently leading Lemay's sustainability practice and is a key driver of its net positive approach. Loïc has worked on numerous high-profile commercial, institutional, and residential projects as an expert in sustainable design in France and Canada. In 2020, he won Canada's Construction Emerging Leader Award for industry contribution. So, I guess we'll just move on with our first panelist. Dave, over to you.
Great, thank you. I'm just going to start my clock so I know that I do not go over my time. So I'm going to give a quick little overview of, next slide please. I'm going to give a quick little overview of some of the sort of headwinds, tailwinds, and potential rocky shoals on the way to net zero. Canada has announced some very ambitious climate targets, both in the short term and the long term. And the provinces and the federal government and territories have also rolled out really comprehensive sets of carbon reduction policies. And I'm going to sort of explore a little bit of sort of what do those trajectories look like in terms of achieving the targets, what are the policy packages in place, and finally, what are some of the opportunities and sort of risks that we see. This will set the table, and the subsequent presenters will go into a little more detail in some areas like green buildings. So next slide, please. So the first thing we have to see, so the top line here, the blue line on the right is Canada's current emission projection from Environment Canada and from Environment and Climate Change Canada. And the bottom line is sort of the net zero trajectory out to 2030 if we sort of draw a line between current emissions and we want to get down to some sort of net zero number. Now, the first thing you need to know about net zero is you can have gross emissions or remnant emissions that are really hard to abate sectors, perhaps like aviation, and we have to deal with those remnant emissions, and we can deal with them all kinds of ways, including through landscape carbon sequestration, or even direct air capture technologies, offsetting emissions by buying global reductions. So typically we put about 100 megatons into a model as a sort of a target in 2050, and then we spin the model out to sea. So the first thing we basically see now that the current policies we have in place are not quite online or in line with the federal government's targets. And that was before Budget 2021 and really the Healthy Environment, Healthy Economy report that advocated a $170 carbon price. And what we actually see is a potential to hit those targets with the new policies that are rolling out, or at least for those policies to be tuned to deeper target reductions. But this chart, what it really shows is that this minus 40 to 45% reduction below 2005 levels is on a net zero compliant pathway. So the government's current target is not that far off where we need to go. Some would argue, environmental groups in Canada, that Canada's fair share of reductions is more like minus 60%, but the government is committed to minus 40 to 45%. And in our view, it looks like it's compliant with a trajectory out to 2050. Now, it's not all smooth sailing to get here. So what this reduction represents is a year-over-year change in emission reductions that is almost 60 times higher than we've achieved up to this point in time from 2005. So if you look at our emissions from 2005 to 2019, where we have data, and you see that we've reduced emissions at a rate of 0.18%, and we need to go to minus 6% year-over-year changes in reductions. So quite a large transition from what we've already done. The good news is that policies in place, once we model those into the future, we look at the carbon price, we look at subsidy programs, electric vehicle mandates, electricity generation programs, light-duty vehicle standards, clean fuel standards, all these things. And we see that we're basically, policy prices have to rise significantly, well above the $50 and closer probably to $350 or so eventually. But the $170 price more or less gets us a fair ways towards the target, with all these other complementary policies or companion policies that are also driving down emission reductions. And the GHG decline rate to hit the target is about 5 times current policy. So Canada's current efforts don't quite look to be aligned with this minus 40, but certainly we think the architecture is there to tune them a little bit and to see how we go. Importantly, investment in clean energy has to, go back to the last slide. Investment in clean energy has to more than double. And so there are some challenges there. Now, the good news is there's some market and policy tailwinds that are helping. So the market drivers, you can think about light bulbs, LED light bulbs, electric vehicles, renewable power, batteries paired with wind turbines. These things have all taken off in the short term, and we expect them to be really, really important in the future. So we have this sort of group of technologies that can deliver, and then we have a bunch of sort of backstop technologies that we're going to need to go really deep, like carbon capture and storage, direct air capture, hydrogen. These are what we call wild cards. I'll talk about them next in a bit. And finally, there's my 5 minutes. So yeah, I didn't have to go on the other slides. This is sort of my summary slide to go through it all. And so finally, renewed US action is a really good thing for Canada. So when the US moves, it makes a lot of our technologies cheaper. So we got electric vehicles that are going to be sort of being deployed in the US. There'll be a big demand for biofuels, for net zero electricity. And we're already seeing basically low carbon goods and services currently being exported, outpacing other goods and services at a rate of sort of 10 to 1. So we're seeing massive deployment in these technologies through the export market. And finally, climate governance. Canada is a federation. All the provinces, territories, and federal government are doing their own thing, and they need to work much closer together on policy. So that's it, and I will stop. And this was all backup, as it were, so we can just continue through. I'm sure these slides will be available later, so you can take a look at sort of the information we have here.
Yeah. And maybe we'll get back to them later in the discussion part.
Yeah, great.
All right, Thomas.
Hey, thanks, Hugo, and thanks for inviting me. Looking forward to the discussions today. So I just wanted to bring a little bit of focus to the green building sector. So we can go to the next slide, please. Really, I think what, I know it's the net positive day, but the council right now, we're really focusing on getting the building sector over the next 10 to 30 years to zero carbon. And that requires both, as Dave has pointed out, policy in terms of government, and government as a building owner, as one of the largest owners of buildings in the country, as well as, and I think it's very important, the private sector. I think commercial building owners, institutions have to step up to achieve a zero carbon performance, both at new buildings and existing buildings. The council, we're currently engaging into green buildings, as you know, in various ways, through certification, both LEED certification, as well as zero carbon certification. I'll talk about that a little bit more. We work extensively with government, we do research, we do training. We have trained tens of thousands of professionals over the years. But focus is both on new construction and existing construction. And I want to be very clear that in terms of reaching our climate change targets for the building sector, and assuming that the building sector has to make the contribution like any other sector between 30% by 2030 and 80%, or closer to zero carbon actually by 2050, is we're not going to get there unless we're retrofitting existing buildings. Not talking about homes, existing larger buildings, those over 25,000 square feet at scale. So this is really important. And to do that, which is our last piece, we need the workforce to actually be able to deliver on that. We forget about the workforce. We're losing the workforce in the construction sector is shrinking. The new ones that are coming in, now that there's significant numbers, and the people that are still in the workforce and the new ones that are coming in don't have the skills to either retrofit or build buildings to zero carbon performance. So this is an area that we really need to pay attention to. Next one, please. You can see with LEED, we've been very successful in Canada. After the US, there's no other country in the world that had a larger adoption of LEED. And both for LEED Canada, we're getting close to 5,000 certified projects. We have about 1.4, 1.5 billion square feet of projects in the LEED program that's growing. You can see on the right-hand side, LEED 0.4 and 4.1. This was mid-year. It's already grown beyond that. We see significant uptake across all building types, including mid-rise residential, and building types. And so far, we're getting close to having 500 projects certified just under the V4 program. Sets the stage for great holistic design. But now what's happening is shifting into the low carbon economy. And Dave addressed some of that. You know, there's carbon pricing is going to drive investment in green buildings forward. There's also the investment in what we call the green economic recovery. Post-COVID, the federal government has made a commitment to that, and provinces across the country, depending on the political orientation as well. We raised emissions targets, as Dave pointed out. And then at the bottom is business. We see a real shift in finance, in investment. Big pension funds and others are actually starting to invest in those assets and buildings and so on, technologies that actually reduce their climate risk. This is a very important part for the business side, is they're trying to assess and mitigate and maximize the benefits from investing in those things that allow them to reduce their climate risk and benefit from the investments that are happening from climate change across the globe and here in Canada. Can we go to the next one? We have the zero carbon standard that we launched in 2016, and you can see, we can go to the next one, that's fine. It's a fairly intense standard, and we have seen adoption across the country. And thank you to Lemay for retrofitting your headquarters to zero carbon. I appreciate that. Great project. But this is just how we look at carbon, and it's the embodied carbon. So the carbon that's generated through the life cycle of the building, except for operational carbon, from the upfront to the use stage, and then the end of life carbon is demolished or deconstructed. The operational carbon, which we really focusing very strongly because we need to get that under control. And that's what we call avoided emissions. So if you generate renewable energy, you feed them into the grid, carbon offsets, those types of things. These are the requirements in our standard to get us to the finish line. The next one, please. And the interesting thing is that when we started off, this was the operational carbon, but what's come into focus now is very, very quickly is the embodied carbon. Because, and it's all about the ramp up or the runway we have up to 2030 and up to 2050. The World Green Building Council, actually our international organizations, asked for 40% reduction in embodied carbon by 2030 and 100% reduction in embodied carbon by 2050. And it's very clear because the embodied carbon impact is a one-time impact, more or less, the majority of it, and it's happening now when the building is being constructed. Whereas the operational carbon occurs over time. So thinking about what we need to accomplish over the next 10 years, any building that we have right now that we construct new will have an impact on our carbon profile, on our carbon emissions. So embodied carbon has become a really strong focus across the country. But of course, it's also the hardest to change because you have to deal with all the resource industries that extracting materials for manufacturing materials for buildings. They require to change the practices, to use fuel sources and designs and changes to the products that would take them to zero carbon or close to that. So a really increased focus that we'll see to strengthen over the years to come. Next one, please. And to finish, and so this number that we established in 2016, that if we build all new buildings over 25,000 square feet in Canada to zero carbon operational performance, it would result in a 17% reduction in carbon emissions. So about 7.5 million tons. Just from that sector, that doesn't include the embodied carbon because that came after, that really rose after to attention. So that's not figured into that. But it's 7.5 million. I want you to keep that in mind as we talk about retrofit. So the World Green Building Council obviously is taking that globally. They have a number of initiatives. You go to their website. They really set global targets, particularly now with COP26 coming up in Glasgow. Next one, please. And we're not the only council in the world. There are about 80 councils. We're one of our first ones with a zero carbon standard. There are many other councils across the globe that have now zero or net zero standards to bring to support the building sector globally and in their respective country to get to zero carbon performance. Many of them focusing very strongly again on operational carbon and increasingly on embodied carbon. Next one, please. But I wanted to leave you with a couple of slides on retrofit. And we did quite a bit of work. Large building retrofit is really dependent on two things. And I think in Lemay, you're a very advanced firm, you already know this. But the focus is not just on energy efficiency anymore. It has to be on carbon, on fuel sources. So what this graph actually shows is that we need to focus our efforts so that the blue boxes is really the carbon intensity of the grid, and the little smoke, the smoke that you see there is the size of the carbon emission in respective provinces. It becomes very clear from this that actually our efforts to retrofit buildings needs to focus on the Western provinces because they also have a dirty grid. That's where we need to focus our efforts. Versus provinces like British Columbia has a very clean grid. Quebec has a very clean grid. We still need to retrofit buildings, but not at the same scale. So we really need to target our efforts. Ontario has a fairly large carbon footprint just because of the size of the number of buildings that there are in Ontario. And Quebec has a larger one too compared to, let's say, some of the other provinces, just because of the size of the province and the number of buildings. But this gives you to target your efforts where buildings have to be retrofitted. Can we go to the next one? And these are just some of the strategies, but the potential, if we were to retrofit 100,000 large buildings in Canada, which is about 2/5 of the building stock, that would be 21 million tons of carbon reduction, 3 times as much as we would get from a zero carbon performance or zero carbon building new to zero carbon. And these are buildings over 25,000 square feet with a reduction with different strategies, recommissioning, deep retrofits like you've done in your headquarters, renewable energy where it's appropriate, and also fuel switching where it's appropriate. So in essence, to get to a 30% reduction just from that sector, we would need to retrofit about 50 to 60,000 buildings over the next 10 years. That's the size of the challenge. Can we go next one? And that's my last slide, and we are working very intensely with to get financing in place for retrofits. And we have worked with the Canada Infrastructure Bank over the past year. they actually have now a commercial building retrofits initiative where they allocated $2 billion to financing retrofits for buildings that would otherwise not be retrofitted. And we certify the performance of these buildings through the investor-ready energy efficiency certification. And they also have a program for institutional buildings now that's $2 billion. And now with the election having been decided with the Liberal, as a minority Liberal government, the Canadian Infrastructure Bank will remain in place to do this work. We're supporting that to finance retrofits across the country. Because it's really important is that we get scale and that we get uptake. And that each of these buildings, the 50 to 60,000 buildings, need to reduce their carbon footprint between 20 and 40%. 30% is actually minimum requirement for Canada Infrastructure Bank to finance without any kind of financing. So thank you, I'll stop here. I probably went a little bit longer than I should have, but this is just the workforce piece that we are obviously pursuing. And thank you very much for your time today.
Thanks, Thomas. Loïc, now over to you.
Hi, everyone. Thank you very much, Thomas and Dave, for your insights. I'd like to give you an idea of what it means for a firm, for a practice to do this kind of ecological transition. As you've all seen, we're already facing the negative impacts of climate change, whether it is fires in BC, flood in Europe. The real question is what's going to be the climate that we're going to do. The future is in our hands, basically, and the coming decade is really critical for climate action. Next. So net positive is Lemay's sustainability approach that we developed to try to help find solutions towards the climate transition. We focus on three main pillars: health, environment, and carbon. The vision is pretty simple. Our idea is that every project is an opportunity to do better and to generate net positive outcomes for our clients, the users, and the community. So it's a fairly simple and easy vision that leads us. If you go next. Why three pillars? You might say, again, pretty easy. We identified three main challenges that we need to overcome as a practice. First, we think that every new building we design or every retrofit should have human well-being at the core value, at its center, because we know that built environment have an important impact on the health of human beings and employees and people in schools and all that. So it's something that we want to go forward. The environment, we know that the level of resources and the depletion rates are way too high. It's not sustainable. We use too much concrete, too much everything, basically, too much steel. So we need as well to tackle these challenges of resources, and it's really tied to what Thomas just said about embodied carbon and the shift we need to do about how we build buildings from a material standpoint. And last but not least, the climate change, the most critical challenge we're facing for the century, both mitigating the negative effects and trying to find solutions to decarbonize our economy and the building sector itself. So three pillars, three challenges. That's what the net positive is about. One thing that's important for us as a firm as well is to commit and to use best practice that have been developed by different stakeholders, whether it is AIA, the World Green Building Council, Canadian Green Building Council, or the climate group EP100. It just shows we're committed. We're committed to implement best practices, and also it gives really great frameworks just to be implemented in different projects that we do. An example of what we do is that when we retrofitted the Phoenix, our Montreal headquarters, we wanted to lead by example. That was the main narrative around the Phoenix. And we have demonstrated that it's possible to retrofit a former warehouse into a net positive energy and carbon building, which is something we think it's very inspiring. It was also a mean to help redevelop a neighborhood and have a positive contribution. And we were super happy that because we finalized, we got in August 2021. So that's very, very new, the LEED Platinum certification after 5 years of efforts. So not only LEED, but also green building, the zero carbon standard and fit well. So with the Phoenix, you have an example of what you can do as a retrofit, deep retrofit. It's possible to have this kind of deep retrofit and almost reach a performance that even maybe standards in 2030 might not reach. So that's something that we want to showcase with the Phoenix, with these three pillars and these 3 certifications. Sort of walk the walk, as we'd like to say. In this slide, you have a summary of the different strategies that we've been using to reach this net zero carbon balance. I won't go into the details of that. We don't have time, but one thing I'd like to say is that maybe the best move that we did when we started the Phoenix, the best move in terms of carbon reduction was not to implement all these really interesting and innovative strategies. It was to actually choose to retrofit a building and not building a new one. And that's something that is really powerful because it shows that you can have a deep retrofit and do a building that is really, really performant, but at the same time, you can do a connection with heritage, with the history of neighborhoods. And that's something that we find very positive as designers. Next. Thomas, you mentioned the need for training and skills. That's something that we see this need as a practice, as a firm, and it's something we're really focusing on, giving the right training to our people to design these new buildings and change the way actually we design new buildings. With energy simulation tool, now we're able to predict the thermal comfort, the energy patterns of the building. So it's all these tools combined with new practices and new way of thinking that helps us getting towards integrated carbon approach and buildings that are really efficient and performant. Next. A couple of, as you can see, we have a couple of projects with a portfolio of almost 100 projects, either being certified or in the process of being certified. So when I see that, we're really proud of it. It's a lot of buildings, it's a lot of projects, but what it says is that we have a responsibility as a firm to make sure that all these projects have an impact in their different markets or different communities. So we're really focusing on tracking the measurable values and tracking the impact that all these projects have. And this is something we're really committed within that positive framework. Next. One word as well on our corporate energy transition plan. Again, as I said, we walk the walk, so we have a plan. We try to reduce as much as we can our emissions, whether it is scope 1 or scope 2. So this is the carbon balance that we've done. But in 2019, we decided to overcompensate our carbon emissions, so we have a net positive carbon footprint. So it's one item as well that we're quite proud of. We're continuing, we're still committed to reduce our emissions, but we overcompensate since 2019. So that's, again, a commitment that we've made. Next. And I think, yeah, that's my last slide. So as a conclusion with the net positive, we have sort of a framework for our practice to drive our decisions and the way we work. We really want to scale this for our clients and the different communities we're working with. Yeah, we're really happy about this, and we hope we can have a more net positive project in the future. That's it for me.
All right. Maybe to start with, I thought of keeping our audience questions at the end, but we just got a question, a general question. So I'm just going to ask it, and we'll see where it leads us, if you agree. So how do you see Canada's environmental transition taking into account the different politics and strategies in every province, adding the climate change? Does it seem that it seems not reversible? Okay, I'm not sure I can repeat that. How do you see Canada's environmental transition taking into account the different politics and strategies in every province, adding climate change, that it seems not reversible?
I can jump in there. Yeah, that's a big risk. We're a federation with joint jurisdiction over greenhouse gas emissions by the federal government and the provinces and the territories. We've seen with the lack of federal action under the Harper government, a patchwork of ambition. So Quebec driving forward hard with cap and trade, British Columbia, Alberta, interestingly, with their large emitter program, carbon pricing since 2007. Along comes the Trudeau government and imposes a backstop, which basically says, unless you province meet a minimum standard, we're going to impose the federal carbon price on you, either on your heavy industry or on your fuel, your sort of consumer and small business fuel sort of stream. So two programs, carbon tax versus large emitter program. That looks very positive, but of course, if the Liberals lose the election, it's a really open question what happens with a Conservative government. And we've seen in Ontario the repeal of the cap and trade program that was linked with Quebec happened almost overnight. It was the first order of business of a government only a few years ago. So it's a very real problem in the country. And so what's different or what's positive if we have a change in the federal government and this backstop and and the federal ambition falls away? What keeps the next government honest? Well, the first thing is the large emitter programs in all the provinces will likely survive. So all the provincial governments see value in having a program for their large emitters. So this is the oil sector, cement, steel, fertilizer, chemicals. So those are in place to basically protect those companies against trade actions in other countries. And we're seeing a rise in the threat of trade action if you don't have a solid policy. So we could expect that those programs would continue, but what would fall away very fast would be the consumer-facing carbon taxes and all the other programs like the Clean Fuel Standard, although the Conservatives were supporting a Clean Fuel Standard. So all that to say, yeah, it's a mess in Canada. And until the politicians get really pressured, as they are in some jurisdictions like Quebec, to have strong ambition, those provincial programs and federal programs will fall away. So we're at a really interesting sort of point right now to see what happens. The next election, we could have a real big shift in public perception, lots of climate damages, wildfires, floods, so support for continued ambition. So all that to say, hold tight, but it certainly looks better than it did 4 or 5 years ago. I'll stop.
So maybe I can add to that too. It's good summary from, I think that the time frame that we have to meet our climate change targets is going to be very challenging. The reason for it is just what Dave actually kind of described is, yeah, there are policies, but the policy is the impact, I should say, the impact of the policy is not moving fast enough on the ground. And you can't just take the building code, they're updating the building code, but before the start until the building code takes effect, and actually the first building is built on the ground, it can be sometimes 5 to 10 years. That's where I can raise the whole ship. It's great, but it's not the tip of the spear. I really think that it has to be the business sector that has to be the tip of the spear, and supported by really good policy. But those companies, either pension funds or equity or that invest in buildings, they need to. That's why I kind of made that point. I think they need to invest in low carbon solutions. And we see that increasingly. Is it at a level that we wanted to? No, not yet, but it's definitely coming when big companies are making the shift to invest and banks are making the shift to invest. That could be a real game changer, and it could move things along very, very quickly, because companies then starting to make different decisions around how they want to design their building, how they want to retrofit the buildings, how they want to look at their portfolio. And I can tell you, in a commercial real estate owners that we're dealing with in Canada, they're all having the discussion, how are we going to take our portfolio buildings to meet those climate change targets? But they don't have the solutions yet. So I would expect a lot of action from the private sector in terms of climate change being reversible. I think it is reversible because I think one thing that we haven't really fully had a public discussion on is the role of natural systems, right? And as we know is that oceans absorb carbon, but also soil absorbs carbon, forests absorbs carbon. And I think one of the more exciting discussions more recently is how natural systems like wetlands, like agriculture could actually play a role as part of an infrastructure investment that the government would make and the private sector could make through carbon offsetting in actually using natural systems way more than we have in the past to actually absorb and sequester carbon. So that actually, like wetlands and natural systems has become considered part of infrastructure, not just roads, bridges, telecommunication towers. That could be a big win for us as well. So I think it is reversible. It's just the time frame over which time frame will be reversible. It's certainly not in my lifetime, but we can start pointing the needle in the other direction to actually go in the right direction. We haven't done that yet. We haven't really, our carbon emissions are still increasing. So we still haven't really go the other way effectively in a continued way, but I feel like we're getting closer.
All right, Thomas, I guess you almost answered my my main question. So maybe I'm going to turn it to Loïc, and maybe Dave, you can get back to it. And maybe Thomas, you can get back to it. I don't know. I was, you know, I started with this saying that, well, we often say that the solutions exist. So like, what in your opinion, like, with dealing with the ecological transition, we need to move forward with, like, should we be making a push on policy, business, or design? Just returning to our panel question. So I guess each of you have a different take on that. So what's the role of policy as opposed to business and sustainable design? Like, maybe you can talk about it.
I can say a few words on that. I would say sustainable design, but we need policy as well. But what we see as a practice, and we have different projects across Canada, in the West, in Toronto, in Quebec. So we need to comply with these different building codes, and really complying with the building code right now, it's about building less worse. And what we want to do as a design firm is to build good. It's to build relevant, not only for now, but for 2050, because what we're going to build now, it's going to be still here in 2050, 2060, 2080. So we shouldn't mitigate the influence that architects or designers can have on business decision. What we need to do is certainly to provide the right metrics, the right decision elements to the clients to show it's possible to build zero carbon at the same capital cost of capital. That's just that. And for that, you need to know how to do it. You need to know the recipe, integrated design between architects and engineers. But it's possible. We've done it with the Phoenix. We're in the process of doing it with several clients. So it's possible. So I would say design, to answer your question.
Yeah, Dave or Thomas, any?
I can, I would say we need all three. I think to get to our targets, I think we need all hands on deck. We need to do, we need to do all three. The one issue I have with policy is that policy can be very fickle, right? And depending which party is in power. And it's really too bad that climate change in this part of the world is still a partisan issue. And it shouldn't be, right? Germany had a conservative government for the last 15 years, federal government. And they were as adamant and supportive of climate change as and other governments. It's a non-partisan issue, they all understand. that they have to make progress on it. So, but in Canada and in the United States too, it really much depends who is in power. And that's really too bad, because it's very easily to put your foot off the gas pedal. Like we have seen it in British Columbia. The previous premier publicly stated that she was all for climate change, but behind the scenes, she just took the foot off the gas pedal. Sorry, excuse the pun, but she just took the foot off wanting to make change. And that really, like for a number of years, it just put us back. And then you need to go, then you have to catch up again. So I think one thing would be really to not only hold politicians accountable, of course, I think that's very important, but also for them to make the right decisions that are actually best in the long term, rather than something that might be more expedient in the short term. I think, and the other part is the business, and your Lemay too, like your design and the business, like you have a very important role to play to show that this is doable, right? That we can actually go way further than we thought that we were gonna go. So I think using design and showing to business leaders that this can actually be done, I think that at a reasonable cost, I think that is a big game changer. So I would say that continue on your path and get as many of your clients to go down that route as you can.
Yeah. And maybe if I can give it a different twist to the question to Dave, I was thinking about an article I read in the last days saying that bankers were the new environmentalists and maybe the new environmental economists. Dave, what do you think about that?
Yeah, it's true. You know, we focus on carbon prices and mandates, you know, so electric vehicle mandates, banning furnaces, fossil furnaces, renewable natural gas mandates to decarbonize the fuel that's coming into buildings, you know, and obviously the building, you know, net zero sort of building codes. But these instruments are all about leveraging private sector finance and being catalyzed by public sector investments in innovation and R&D and, you know, project-based sort of programmatic spending. So when the bankers start understanding climate finance and understanding, you know, the value chain coming out of a building or coming out of a project, and there's a culture of sort of, yeah, this is real stuff, and they'll you know, they'll put their money where their mouth is, as it were. And what they really need, and what's different now, is they have to believe that the climate policy, the stringency of the policy, the drivers are going to squeeze margins on assets, and that they need to basically invest in sort of high yielding assets that are low carbon. And that's fundamentally changed. So that, I think that's why your statement's a little more true now. And then of course we need financial disclosure around portfolio risk. And that's a big deal right now in Canada. We've got a lot of, well, you know, in the real estate world, a lot of assets sitting on floodplains or sitting in coastal zones subject to storm surges. And, you know, that wipes out portfolios. So yeah, it's the bankers really matter. But again, it's the policy that tells the bankers that it's real and okay, there's money here. So yeah, I'll stop.
Yeah, many questions in the Q&A section, so I'll just get back to some of them, and feel free to answer. We'll just try to answer as much, and to the audience, like, please post your question in the Q&A, and some of them we don't have the time. We'll try to answer them afterwards. Yeah, well, we were kind of talking about that with the private developers always on the hunt for value, and as their tenants and buyers, how do we get past the how much is it going to cost us to be green and engage in a different kind of conversation?
Maybe I keep it short, but basically I totally agree with that, because it limits us to cost and benefits, right? And I think it was okay. It's okay to do as part of, you know, with the Canada Green Building Council. Next year will be 20 years. We'll be around for 20 years, believe it or not, right? We never thought that green building would become mainstream in a way, right? To the degree it is now, or the term at least. So at the beginning, we had to justify the cost. And I do feel too often these cost discussions are being used to actually not to do it. They just use it as an example. And I still hear to this day estimates how much more a LEED building will cost, which is absolutely not true and totally inaccurate. But the whole point that's being missed is what is the value that green buildings can actually provide? And it goes beyond, way beyond just operating costs, and it goes beyond carbon saving. It goes to buildings can have a really important role in the community. They can, if properly designed, they can, at scale, you know, they can mitigate the impacts of climate change. They can cool down cities if you have green roofs and green walls. If you maintain, restore habitat on a site, it can provide, you know, stormwater impact. So there's the environmental, then there is the social aspect, how buildings contribute to the community and how the community likes those buildings, how buildings can benefit people that are maybe green building. Our litmus test should be green buildings that are for people on the low income scale. They should be in the greenest buildings, right? Because they have less ability to afford energy, right? Fluctuation energy costs. They often found that they cannot look after themselves in terms of food and well-being, and buildings are a really important part of well-being. So all to say is that we are working more and more now to think about, to define what is the value of green buildings actually it provides to an owner beyond just the cost and the operational savings and those types of things. It will take some time to build that, but we're working already on creating that kind of narrative on what is the bigger value of green buildings rather than what's the costs and the savings of green buildings, which is very limiting.
Okay, in your opinion, is this period of return to work an opportunity to complete some deep retrofits in commercial office buildings in efforts to move toward net zero and at the same time address health and well-being within these buildings?
Loïc, you want to go first?
I don't know about this one, but there's something that I found really interesting in this with the pandemic that we've seen and experienced, is that we see that we're able to adapt when we see the threat. And in this case, we adapted super fast because there was a threat to us. So my hope somehow is that we can have the same kind of awareness for climate change and try to accelerate the pace of change. There was an interesting article in the Lancet and different medical journals of really high level. They said that all these doctors and certain medics, they said that climate change is the biggest threat, even more than the pandemic. So we should really accelerate the path of change and transition, because it's a threat to human living and mankind. So I always say that the planet is going to survive. It's not about the planet, it's about us. The planet will always survive whatever happens. So that being said, as a more general comment, we need to change faster. And we've also seen that the way we have designed our cities, like this kind of pendulum movement from downtown to suburbs, is not sustainable and not healthy for people and creating pollution congestion. We need to change that as well. And I imagine policymakers and designers should work together hand in hand to find solutions.
Yeah, and you know what, I agree with all of that, Loïc. And I think from commercial owners and the buildings, when you don't have tenants and you're afraid that tenants will, you know, cut their leases and so on, you're not investing in those buildings. So they're not, it doesn't, the opportunity would be the buildings are empty, you can actually retrofit them. But at the same time, I don't have the best cash flow, so I'm not gonna retrofit anything till my tenants are coming back. So it's a weird situation. But what it has brought to the forefront is kind of the health aspect being in buildings, because there was always a benefit of green buildings, the healthier buildings. I think the pandemic has really brought that into focus. And what we heard from many owners that have certified the buildings to LEED is that for them it was actually easier to transition those buildings to these new ventilation protocols, better filtration of air. And so they had an easier time doing that. So the sustainable design contributed actually modifying those buildings and adjusting the buildings to the new requirements under the pandemic. So that's a very positive. And I think that is something that we can build on. Again, the value of green buildings goes beyond just the cost and benefit. Is how much do you like being in that building now? How much do you feel healthy and safe in those buildings? So I think we can really, through LEED and moving forward, we can make a real contribution there.
I was going to jump in. So the Building Back Better, the focus after COVID-19 of the federal government has been there's been a focus on buildings. But if you actually look at what they're proposing and what, especially in their platform, their election platform, it's really heavily focused on residential houses. Their spending programs, their retrofit programs, sort of the retail politics calculus figures prominently there. So there is a gap on the commercial building side and the Building Back Better. There's sort of the assumption that there's a carbon price in place, which does some things. There's an RNG mandate, which will decarbonize fuels, and then we're going to try and knock out fossil fuel furnaces in time and push for electrification. And so I would watch this space in the future to see what the federal government rolls out on the commercial building side. Because as I said, to date, it's been and this is across all the platforms, but particularly the Liberal platform, a focus on residential buildings. So I'll stop.
I'll try to wrap a few questions into another question. Building regulations is mostly about new buildings, and Thomas, you in your presentation you spoke a bit about the importance of retrofitting existing building. Can you tell us a bit more about the importance of tackling deep retrofits with our big existing building portfolio?
Yeah, sure. It's a good question. So first of all, the federal government is actually working on a retrofit code. So there will be, first time in Canada, there will be a retrofit code. I haven't seen it, we haven't commented on it, so I don't know what will trigger it, right? It's always with retrofit, is what will trigger the code. Out here, I live in Vancouver, British Columbia. The provincial government here just has announced that they would have a retrofit code. The city of Vancouver has a program around building retrofit. So does the city of Toronto. So we starting to see some of these policies coming up around about a large building retrofit, not homes, the kind of the larger building retrofit. The homes will have to be done by the feds, and they have a program. They're going to invest several $billion over a number of years to help homeowners to do the retrofit there. But for the large buildings, we're starting to see jurisdictions develop policies as they understand that retrofit is really crucial in climate change, but also it has also a number of other opportunities, providing healthier environments, upgrading existing assets in the community, better design, and so on. Huge opportunities. The trick is with retrofit is that there are probably about 20 to 25 large commercial real estate firms in Canada that own about 60% of the commercial real estate, including housing, malls, offices, industrial parks, and so on. So they come really from an investment point of view, which they have to, unfortunately, that's their business. And you have to convince them, and it's going to be somewhat of a long run, you have to convince them and say, you need to upgrade your entire portfolio. So you need to have a plan in place on how you're going to do that. Because by 2050, your buildings need to operate in a lot lower on a carbon scale than they are now. And what is your strategy for your portfolio, depending where your building is in the country? If it's in Quebec, you're going to electrify the asset. If it's in, using hydro, if you're in Alberta, are you going to buy renewable energy certificates? What's the strategy varies and the investment varies. But the sector is going to be really hard pressed to retrofit a building if it's not due to be retrofitted or if it doesn't make sense financially. And that's a big barrier. And that's why we work with the infrastructure bank to get this financing in place. It's very advantageous financing over a long time that allows owners to retrofit buildings that they otherwise would not retrofit and use their own money. So they can use somebody else's money to do it. This is very financially driven. And we'll see how the infrastructure program goes. If it goes well, they are committed to putting more money into this. So they could put another $2 or another $4 billion into commercial buildings retrofit. But we first have to see how that first phase leg goes. But that's where the barrier is. It's about really around finance and who is willing and what the benefits are from retrofitting the investment and so on and so on. So it's not easy, but it needs to be done.
Okay. Another question here from our audience. I like it. It was not included in our in our panel question, but I think it's interesting. It's going to lead us to our last question. What about people's behavior? Like, you know, we hear a lot about social acceptability now for development projects and so on. But do you think people are ready to change now? And, you know, if we accelerate this ecological transition, what's the relation to people's behavior, in your opinion?
I can jump in there and maybe riff off the last question too. You know, there's a reason why we don't use carbon pricing or assume carbon pricing is going to do a good job in buildings, and why we have mandates and building codes for buildings, because, you know, the split incentive problem, we all know where that is, where, you know, you rent somewhere and the costs are just flowed through and you have no incentive to change your behavior. So we go therefore to sort of really aggressive mandates. And what I would say, it was two things, and just to finish that, you know, riff off that last point. Don't underestimate this federal government's willingness to do something that you never thought they'd do. So $170 carbon price, ban thermal coal exports in the latest in their platform. You know, basically do very, you know, ban the sale of fossil fuel vehicles. You know, within the lifespan of a car that a new car right now, within its lifespan, the next, you know, car 15 years from now, it's banned. So furnaces, I wouldn't be surprised to see some sort of mandate around fossil furnace sales in the future. So that would be one thing. So that'll drive a bunch of behavior, and that's that expectations again. And then secondly, yeah, we're all getting more receptive to making low carbon investments. Obviously, we all know this. We know about the carbon price. We read about carbon policy in the paper. We understand about climate damages coming through the news cycle. So our perceptions are increasing, which means our willingness to spend our money on longer term investments to reduce future costs is higher. But behavior is the challenge. So we're always going to have this mix of sort of market-based incentives and these standards where those incentives don't work. And that's really sort of the good thing about our policy architecture in Canada right now, is this nice mix of pricing and standards and subsidies, codes to drive everybody's behavior and sort of fight or close off those little weaknesses in the system. So I'll stop there.
Only one thing to add is, and it's a great opportunity, is early in the year, there was actually a survey that was done that showed that a high percentage of Canadians are for action on climate change. But those that were for it, the 70% or 72%, whatever the number was now, is most of them didn't understand what that actually meant. What does that actually mean on a day-to-day basis? What does that actually mean? And I think that's a great opportunity for government to say, okay, you know, we have the carbon price, we have the climate change policy, we have the targets. What do you have to do to get there? Like, you know, Dave mentioned a few options, but you have to tell people. For us, it seems natural, like what the solutions are. For the majority of Canadians, I don't think it is. So I think that that's a real opportunity to really give people options, from electric cars to, you know, heat pumps instead of oil gas furnaces, to you know, public transportation, to, I mean, what are the, I think people are confused. They're afraid and confused at the same time what they're supposed to do. So that's a big opportunity.
Yeah, just one comment on that. I think we should provide incentive, but at the same time, malices like a tax. We should not, our government shouldn't be that afraid of tax. In terms like, we know the trend of SUV and cars growing bigger, and like now they're so big that we don't have enough space to park them in the cities. It's just it's both dangerous for pedestrians, it's polluting. It's just a personal choice to own a big SUV. I mean, it's a personal choice, it's a behavior, so you should have a signal in the price that says, look, it's not sustainable and we tax you. That plain and simple. It's not going to be popular, but we need to find mechanism to sort of balance market problems sometimes. I think that the car market is quite dysfunctioning right now for that, and yeah, there should be a mechanism somehow.
I was going to say just really quickly, Hugo, the information, right? So information is always a complement to policy. What do we get for what do we spend? What's the payoff? And one of the big information gaps right now, Thomas mentioned heat pumps. If you factor in future heating and cooling degree days under a warming climate, you would put in a heat pump over anything else because you're going to be cooler and you're going to be hotter all the time. And if people understand that and actually see the projections in their cities around what temperature in 10 years looks like, it helps with the calculus. And we just don't have that information, right? It's just not in the calculus of buying that piece. We may think about a carbon price, but we certainly don't think about our heating and cooling loads in the future.
Yeah. All good points. Already 2 minutes past 1. Thanks a lot, Dave, Thomas, Loïc, for participating to this panel. Thanks for your insights. And so I'll keep the last question for myself, and I'll answer it for you. Listening to you, I think, if I listen correctly, we will meet our 2030 and our 2050 carbon emissions reductions targets. So thanks a lot for your insights again in helping us achieve these targets, and talk soon. Thanks a lot.
Thank you for inviting me, and thank you. Nice to see everyone. Great questions from your staff too.
Yeah, it was great.
Yeah,
and from the audience. Thanks a lot.
Yeah.
Thank you.
Great.